I'm excited to reveal something I created that I think will be a very useful stock tool for all of us to use. It's simple, effective, and, well, I think just fun. Our brains work best through familiarity. What's one thing we all do when we go grocery shopping? We look at the nutrition label facts of foods. These labels are set up to be uniform and something we all recognize and know how to read. It helps us to see how nutritious a food is and helps us make better decisions. When it comes to stocks, however, there is not really that one format that investors can all recognize and utilize like the nutrition facts label on food products. Financial performance of our stocks are displayed in thousands of different ways depending on the source used, and I think it creates a lot of confusion. I think if there was one financial label that all stocks displayed, it would help create better investors as we would learn what's on those labels and better determine a stock's health or quality, just like when looking at a food product's nutrition label. I decided to take something we are all already familiar with, which is the nutrition facts label, and create a nutrition label for stocks. So I'm taking a format we are all already familiar with and transforming it into a label that displays a stock's most important measurements and metrics. I think this will make it easier for investors to read and learn in a simple, familiar format, and I'm very excited to reveal this to you all. I put a lot of work into it. Before I reveal my new stock facts label, let's quickly look at my portfolio and its performance, as I promise to do this with every single video. So if you like that type of transparency, if you like the content you see on my channel, be sure to subscribe. It greatly supports me and I greatly appreciate it. This is an investing family on this channel. So right now you can see my portfolio is up 4%, almost $2,500 of unrealized gains. A few stocks I want to point out is Microsoft is heavily in the green for me, 38, almost 39%. The tech sector in general has done great. And today we're going to use Microsoft and Cisco as some examples with my new creation. But then some companies have gone into the red. Home Depot's fallen, we have Union Pacific, we also have some ETFs like FMAT and VIXIS that have fallen into the red. So this might be presenting some opportunities. I still think there's some volatility through the next couple months and until the Fed announces they will reduce rates. So for my reveal, let's first look at a food nutrition label itself. It first appeared in 1994, was revised in 2016, and updated in 2020. The purpose was to help consumers make better choices and encourage food companies to produce healthier food. So looking at this nutrition facts label, some people want to control calories. This helps you do that. Some people want to control their fat intake. This helps you do that. Maybe cholesterol, sodium, carbs. There's a lot of low carb diets out there. Also low sugars people focus on, or higher protein. This label will help you reach those goals. Not only that, there's also vitamins and minerals that it'll label. Maybe you're more deficient in a vitamin D or calcium and you want to focus more on those foods that have those. This will help you pick those foods out. So it helps us get products that are more tailored towards our needs. Now, here is my stock nutrition label, what I created, and I hope you all like it. I've been very excited to reveal this. I've been working on it for quite some time to make it just right. So let's quickly use and review Microsoft with my new stock facts label. Now you will see at the top there's the ticker symbol followed with the company name, and then we have the market cap size and the price per share. Some people like to invest in large cap, medium cap, or small cap stocks, so that's why I included that. And the price per share is something we all like to see. Then I included the price per earnings. This is something, again, I think most investors are familiar with. I also included the price per operating cash flow metric. This is something I have not included on other charts I've introduced. So what this is a stock price compared to its cash flow per share, or the cash a company creates compared to its stock price. So you're paying X amount for each additional dollar of cash flow. And typically the lower the ratio, generally the better, the less expensive a stock is. But I also factored in below that the cash flow growth over the last 5 years. So this isn't the ratio, it's showing the growth. So that way if you have a higher price per operating cash flow ratio, does that prior 5-year growth kind of support that, yes or no? Then we move on to revenue, trailing 12 months in the last 5 years. That's kind of the theme here. And of course, revenue is something we all want to see a company growing, so that helps us determine that. Then we have gross margin, return on equity, great profitability and return metrics. And then the most important thing, I like to see the debt of a company. And I included the two I thought were most important over the trailing 12 months, which is the debt to assets and the debt to equity. Now, a highly leveraged company to me is unhealthy, and a low leverage company is healthy. So I definitely wanted to include this. At the bottom, we can determine this our vitamin section. Just like on the nutrition fact label, the dividend I determine is like a vitamin. It helps boost a stock up based on how healthy it is. So we include the dividend yield, the dividend payout ratio, and the 1 in 5 year growth history. This is something I think, as also someone who likes to invest in dividend stocks, is very vital to all those out there that want to invest in dividend stocks as well. So my hope is that by using this with every stock I review, we can all become familiar with it and learn more about a stock's performance metrics. We can also compare these stock nutrition labels between different companies, just like we do foods, to help us pick the better stock. Of course, this label I created is a great starting point, and I choose what I deem the most important measurements, as there are endless ratios and figures that if I included too many, it defeats the purpose of a simple to read and effective label. So always be sure to do further research before buying a stock, but these labels should help you determine if a stock is worth your time or not. Now let's utilize this in a different way. Let's compare Microsoft to Cisco and see which one is the more healthier, more quality company. One is a tech growth stock, Microsoft, and the other more of a tech dividend play, which is Cisco. We'll see here, one is a huge market cap size of 2.4 trillion. That's Microsoft. The other one is 202.6 billion, a little bit lower. And the price per earnings, we will see two different stories. With Microsoft, their trailing 12 months is higher than their prior 5-year average, where Cisco, it flips the other direction. Their current trailing 12 months P/E ratio is much lower than their 5-year average, which might deem Cisco's a much better value when comparing its price per earnings. Now, the price per operating cash flow is much higher with Microsoft at 29.89% versus Cisco's 15.48%, but I think Microsoft's is more supported with that prior 5-year cash flow growth of 24.67% versus Cisco's much lower 3.44%. That's barely any growth. Now, the revenue we will see over the trailing 12 months is kind of similar between the two. Microsoft edges out a little bit higher, but over the last 5 years, Microsoft has been the better performer by far at 17.13% versus Cisco's very dismal 1.44%. Now, the gross margin and return on equity, Microsoft is both 10 percentage points higher than Cisco, but Cisco's is still healthy. These are great numbers, so I deem these both good in these areas. Of course, Microsoft just the more superior stock. Now, the debt. This was a surprise to me. Microsoft is much higher than Cisco. Their debt to assets are at 21.29% versus Cisco's 10.18%, virtually in half. As well as the debt to equity on Microsoft is higher at 43.57 versus Cisco's 23.64. So regarding debt, Cisco wins here. Now, dividend-wise, let's look at this. The yield on Microsoft is very low at a 0.82%, where with Cisco, it's healthier at a 3.13%. It's more attractive. Now, the payout ratio, however, Microsoft's is lower at a very healthy 30%, where Cisco's is at a 56%. I like to see payout ratios that are below 50%, so this is just above that, which I deem acceptable. And I do hold both these stocks in my portfolio, mind you. Now, the last thing is the growth over the 1 and last 5 years. Microsoft is better here. It's grown more around the 10% range, where Cisco has grown between the 2.5 to 3.5 range. So overall, I want to point out with that payout ratio, though Cisco's is much higher, it is paying a much higher dividend yield. And for 30% payout for Microsoft to only be paying out a 0.82%, that's something to kind of analyze as well. It might be kind of high compared to its yield, but I still pick Cisco when it comes to the dividend, though the one good area with Microsoft is its growth rate. So higher quality is the Microsoft stock, but the better valuation is Cisco. This is what my stock facts label helped us see quickly. So for me, I would deem Microsoft not a buy just by looking at this versus Cisco a buy due to its lower valuation, yet still healthy gross margin, return on equity, and lower debt than Microsoft. Plus, that's a good dividend with the only downfall of its lower growth rate. So there you have it, my new stock facts label I created, and I would love to hear your feedback on this. And I hope going forward, this will be a big help for everyone as I cover and compare stocks in a familiar, consistent, simple, and effective way. Again, be sure to subscribe if you like this content, if you appreciate what I created, and share. This is an investing family. We're all here to grow and become wealthy together. So until next time, I hope you guys have a great day, and thank you very much.